Hello everybody, welcome to another update on the stock screener. Today we're going to talk about Galane Gold because they reported earnings, and as you can see, shareholders are not happy, but I will dive deeper into the details and tell you that everything is fine. I will take your hand like a child and analyze it. So this was a press release. They gave us some numbers on how it was pre Galaxy production and how it was post Galaxy production. And I think the numbers are pretty okay. And they confirmed the guidance that we already had. So nothing has changed. And I still think that we are going to double and triple in the next year. Gold is also doing fine. It's probably going higher by next year. So let's go into the details. These are the latest market caps and gold prices, and I still think that this is going to double and triple from the current 37 market cap to above 100 million. Okay. Earnings will be around 10 million for this year and probably going much higher next year. So PE is around 3.5 and will be going lower by next year. So let's dive into the numbers. First of all, we need to talk about grade. So this was a feasibility study. Galaxy had a grade of 2.7, 2.4, 2.6. And here we have the results. Galaxy is around 2.7. So this is okay. Nothing to see here. 2.7 is actually higher than the 2.4 here. And here it's 2.7. So it's around the guidance of the feasibility study. However, Princeton, we see here a grade of 5 grams per ton. And they mined from the PS5, PS19. So here you see that PS5, PS19 was 3.7, 2.8, 3.7, 2.8. Here it is a bit higher, 4. But our grade came out at 5. So this is much better than the feasibility study. So this is one observation. We have better than expected grades. Now, let's take a look at the production. So these are the amounts of production that we have. So this is the amount of ore times the grams per ton. We put it into ounces and we do it per month. So this is the monthly production right now from Princeton, Galaxy, Tailings. So total is around 800 ounces per month. So we are actually here then, okay? So this was a feasibility study. We are now still in this phase and we are going to this phase. So it's still going to double in production this quarter or next quarter. So these were the Q4 earnings, which were at lower production, right? 800, 800. So we are just going to see a doubling in production this year. So people saw in the press release that they reported a loss. Of course, we have a loss because we are not in the full production yet. And that's why people are selling, because they don't understand where we are. We are still here. Okay, so let's take a look at these numbers. The ore milled is around 100,000, which is this times 4. So we are still at this level here, 100,000. which will go to a much higher level, 300,000, and then next year it will double even more. Okay, so the growth is still going to come. Another thing that I wanted to talk about is the gold ounces that were sold. Okay, so this is the number that was produced, 2,440. As you can see in the press release, they produced 2,440 ounces in the quarter, but they only sold 1,600. Okay, 1,600. And based on this number, they calculated the revenue, which is 1,620 gold sales times the gold price was 1,814. So that's the number 2.9 revenue. And that's also the number that they reported on the balance sheet, 2.9 of revenue from Galaxy. And that resulted in negative operating earnings of 430,000. So which means that cost is revenue minus earnings. So the cost is 3 million with an AISC of 2,000. So that's not good, 2,000, but that's because they only sold a part of their production. Now let's take a look at what the real AISC is. So now we take the real revenue, which is this production, the full production, times the gold price. And okay, so the cost is the same because it's just the same operation, right? And then the true earnings are the revenue minus costs, which is 1 million. So they actually earned money this quarter. They didn't have a loss, okay? They actually earned 1 million in operating earnings. And the AISC is this production divided by the cost, and which is 1,380 AISC. So that's about here, 1,380, right? So we're still in this phase here, and the costs are going to come down by this year. And let's calculate that. So AIC is going to go to 1,000 from this 1,400. The production is going to double, okay, 2 times this production, because we are going to go from here to double, okay? So double the production and at this cost. So the operating earnings is revenue, which is this times the 1,800 gold, which is actually probably going to 1,900 and 2,000 by this year, minus the costs. And the costs are the 200 here AISC multiplied with the gold production, which is the cost then. So the operating earnings for this year will be around 4 million, okay, per quarter. 4 million per quarter, and you also need to subtract some of the administrative costs, which are around 1 million. So we have corporate general and administration 500,000, other expenses 500,000. So just subtract 1 million from that. So we will probably have earnings around 3 million, right? 2 to 3 million per quarter times 4 is around 10 million in net earnings this year. So that's the outlook. 10 million net earnings for this year. So that's a PE of 3.5. And when we go to next year, 2023, they will double that from here. So this is going to double even more. and that will give us around 6,500 production. Okay. Add an AISC of 800, which is going from here 1,000 to 800 by next year. And we use the same formula here, will give us operating earnings of 6.5 million. And you can subtract a million or two from that. So that gives us like 5 million in net earnings times 4, because this is 1/4. So that will be 20 million in net earnings. So what would you give a company with 20 million in net earnings for the coming 10 years? I would give it 200 million market cap, right? And maybe it's in Africa, so let's give it 100 million market cap, a discount of 50%. So yeah, there is an upside of at least a triple from the current market cap. And I didn't even add Summit to this. If Summit goes online, and they will provide an update on that, on how they will restart it, then we will add another 100 million to the market cap. So you're talking about 100 plus 100 is 200 million. Okay, so that's the outlook. We are still long on this. We are going to triple from this level. And I'll see you in the next video.